Support comes from Missouri Forest Products Association, committed to sustainable and sound conservation of the state's forests, which support more than 41,000 Missouri jobs, resulting in a $10 billion industry. ChooseWood.com.
This is St. Louis on the Air from St. Louis Public Radio. I'm Elaine Cha.
Banks and credit unions seek deposits. Well, if you're seeking deposits to grow your balance sheet, you are going to go to wealthier communities. Trust in the banking sector we've not got there yet.
Then we had to create things that help people have financial health, because it's financial access, then it's financial health.
Earlier this month, the failure of Silicon Valley Bank marked the second largest bank failure in United States history and the largest since the 2007-2008 financial crisis. Another bank in New York also failed. That got us looking into St. Louis's locally owned banks. It also got us asking a lot of questions about the kinds of financial institutions out there, as well as the role such institutions play in our communities. So we arrived at credit unions, which then led us to St. Louis Community Credit Union. Now, there are thousands of credit unions across the country, but as of last year, there were only about 40 that are Black-owned. And as it happens, St. Louis Community Credit Union is one of them, and it's the only one in the St. Louis area. Joining us now to talk more about the significance of that and the role of banking and financial institutions in communities, we welcome Kirk Mills, President and CEO of St. Louis Community Credit Union. Welcome.
Thank you.
And Alex Fennoy, Senior Vice President of Business Services at St. Louis Community Credit Union. Welcome.
Thank you.
Now, before we talk about community banking, let's talk about recent headlines. I mentioned in the introduction the collapse of Silicon Valley Bank and another bank in New York. And that prompted St. Louis Community Credit Union to issue a statement reassuring your members. Kirk, why did you feel it was important to do that?
Yeah, thank you very much. Great to be here, first off. It's important that certainly St. Louis Community Credit Union members, other credit unions locally and bank, customers in the St. Louis area kind of know that St. Louis area banks and credit unions are well capitalized. We're all insured. Depositors are insured up to the limits in FDIC in the banking community and in credit unions with NCUA. And on top of the insurance, banks and credit unions locally are very well capitalized, right? So there's plenty of cushions when things go up and down. So we really thought it was important to make a statement for our membership to know that their money was safe and secure.
Mm-hmm. Now, Alex, one thing that struck us, and that includes our show team and our newsroom director and colleagues, is that there's been a lot of attention to banks, not necessarily credit unions. So just to make sure that everyone's on the same page, can you briefly describe what is the difference between, a bank like the one that failed and a credit union?
Yeah, great question. And it's simply, the most simple thing is it's the ownership, right? A bank can be either privately held by a family or a few families or whatever, or they can be a publicly held institution, but the ownership is those folks. Credit unions are owned by the memberships. So we don't have like a paid board of directors. Any credit union, they're all volunteers. The other thing that we have is each of us. We have, in our case, 57,000 members. So each one is a dollar shareholder in the membership of the credit union. I think the advantage to that is we're fiduciaries. We work for the membership of the credit union, not for Alex Fennoy or Kirk Mills or some family that owns the credit union. And all credit unions are that way. So that's the major difference.
And why do you think there is sort of lack of more general knowledge about that difference?
That's a good. You're talking to an ex in the banking system, an ex-bank more guy, and I think it's primarily because credit unions in general don't get into commercial lending as much. Now, we do, and other credit unions do, so I can't say that they don't, but they're not, our portfolios or our loans are not made up as much in the business arena. Typically, it's more on a consumer and mortgage basis. So that's more retail and consumer. When you have business people like banks work with more often than we do, then the word gets out of who you are more.
Okay. That provides some interesting sort of illumination there. Right. Now, Kirk, St. Louis Community Credit Union has nearly 60,000 members and 16 local branches. Who are your members and where are they from?
Yeah, so interesting. Going back to a little bit what Alex said, our roots are from the St. Louis public school system. We used to be St. Louis Teachers Credit Union. And in the late 90s, as the NCUA expanded the field of membership regulations, we went for and received a geographic charter. So when you think of our credit union, we have 4 counties in Missouri: St. Louis City, St. Louis County, St. Charles County, and Franklin County. And then over in Illinois, we have 4 counties as well: Madison, Monroe, Jersey, St. Clair. So that's our field of membership.
Okay.
But specifically to your question, we focused on urban, underserved areas. So, when you look back 20 years and you look at our branching strategy and you see where our branches are, that's what we've focused on. And typically you're talking about underserved areas, typically predominantly African-American, lower income zip codes. You get the idea. So that's what we've focused on, and that's been our primary membership to this point.
Right.
But again, we serve those, we're trying to find folks in other counties too.
Everywhere, right?
Yeah.
Well, I mean, the fact that was where you started, it speaks to some systemic issues, right? And in the intro, at the top of the show anyway, I had said too small to serve. We can use some other adjectives in there as well, but there has been a history of systemic racism in financial services, right, in banking. Kirk, when you spoke with our executive producer, Alex Hoyer, you'd mentioned that a bank of similar size to St. Louis Community Credit Union, with the number of branches it has, would typically have about $2 billion in assets. That's with a B. And, St. Louis Community Credit Union has roughly $350 million, with an M, in deposits. Now, you could think of that as being like that's comparatively small. But in terms of, Alex, what you were saying about who's attracted to credit unions and who's attracted to these bigger banks, I think it gets to sort of the credit union's emphasis on community banking and in trying to close the racial wealth gap in particular. So, Alex, how is it that your institution is combating the racial wealth gap? And can you provide maybe a very concrete detail?
Absolutely. So the first thing we did, and this is before my time here, Kirk's been here the whole time of that, of sort of that strategic change in the credit union. But, I've been here less than 2 years. But what we did is we said we want to target our resources in areas that have historically been underserved. And by doing that, first we had to create financial access. So that 20-year mark ago, we had 4 locations, I believe, and now we have 9 locations in the city. And our 9 locations are within 98% of the city population is within 2 miles of any of our locations. So we're spread out pretty evenly, pretty dispersed to be able to do that. So financial access was number 1. Then number 2, this is all 20 years ago up to today, then we had to create things that help people have financial health, because it's financial access, then it's financial health. So we created products and services that met people where they were and kind of tweaked our underwriting to be able to say more yeses or maybe a counter offer on a loan request, because it's all about the loan. Anybody can take in deposits. Are we getting people that need a loan to get a car, to fix up their home, to start a business on the newer end for us, any of that? Then the third leg is once you do financial access, financial health, then you move into financial wealth. right? And financial wealth is why the board and Kirk and the rest of the senior leadership in my group, we came in and said we need to work with small businesses because it's only really three ways to build wealth in the country.
Yeah.
Inherit it, real estate through either your mortgage or your home or investment property, and then being an entrepreneur and owning a business, right?
And I appreciate that you talked about like 20 years because, I mean, wealth doesn't happen overnight.
That's correct.
Certainly. And it's, like that investment in community part. And your trust is something that also has to be built over time. Kirk, you're nodding. Now, why do you nod?
You're saying things that make so much sense, but people have to sort of peel the onion back and have those discussions, right? And, you mentioned earlier, trust in the banking sector is we've not got there yet. We're still in its 2023, as you point out, right? And we've been working on this for decades, trying to build that trust. And it's doing things through, like Alex said, is you have to create that access for folks, right? Talk about financial health, and it's really providing financial dignity for folks. And to your point, the banking sector, including credit unions as a whole, have not been good at reaching out to underserved areas, predominantly African American, at least in the St. Louis area.
And is that primarily, because there isn't willingness to take a risk or believe in people?
Yes, that's certainly a piece of it. I think the other is, to grow, and you kind of mentioned it in the data, banks and credit unions seek deposits. Well, if you're seeking deposits to grow your balance sheet, you are going to go to wealthier communities. Well, where are wealthier communities in our country, certainly in our region? They're typically dominated by white families, right? So in that growth, that's where you see banks and credit unions branching, right? You have to intentionally look at areas that are underbanked, right? We talk about food deserts. There are banking deserts, right? These are questions we asked ourselves years and years ago and continue to ask ourselves is, when we talk about we, who are we leaving out? And that's what we push ourselves on is how do we include more people?
That's right. Just to add to it, and there's some inherent, in my opinion, these are the words not of St. Louis Community Credit Union when I get off on the soapbox. So this is of Alex Fennoy. There's an inherent that in underserved areas or with people who have been left out or who have not been in your we, as Kirk just said, or in your belong, that any loan to that group, no matter what it is inherently more risky. Well, we've got data to prove that that's not the case. But if you don't step into it and really begin to actually lend in those areas, then you'll go off of it's almost like group thought. You go off of the fact that all of these other institutions aren't there and I haven't done it, so it can't work. And that's not been our experience.
Right. So it's generative in a negative way.
Correct.
Now, St. Louis Community Credit Union is primarily made up of Black folks. Why is it for everybody? Maybe this is there's an obvious answer to that, but why is it for everyone?
Boy, there's a lot there. It's interesting that, people need to understand that you have a diverse group of folks in a credit union, and then we're minority owned because of our membership, okay? We believe that people should want to join an organization like that because exactly what you said, we need those deposits because we're a fraction of the size of other banks and credit unions that serve the same number of people, right? So for us, we look at it and say, come join, you belong, right? And you can literally help do what we do and help groups that, again, have historically been marginalized just with your deposit, right? Everybody belongs. That's what we say. It's just, again, we've targeted resources to those communities that need it most. And we will continue to do that.
That's right. Just to add to that, just think of it another way, is that banking itself should be looked at, in our opinion, as a general community good. right? And we talk about wanting to improve. I'm just specifically talking about St. Louis and with the things that, not getting on the political, but the new administration, Mayor Jones and all of folks are doing to make St. Louis better. How can we do that if huge swaths of areas continue to be underdeveloped or lack of resources? The whole ship won't rise if we have 20-30% of us that are continue to be historically below the poverty line. We can't raise this whole region, which means we won't attract, we won't keep our talent. Kirk and I in the waiting room were just talking about it. I'll move on. Our children, we have adult children. Well, 3 of my adult daughters live outside of the St. Louis region because it wasn't attractive.
And where are they, may I ask?
Dallas, Houston, and Tulsa.
Okay. And
I want to change that.
You want to change that? Yeah.
Selfishly speaking, I want my grandkids here.
No. I mean, that's the grandparents' prerogative, definitely. And then is it the same true for you? I mean, are your grown kids here, or do they live elsewhere? And is sort of the way things are all across the board part of the reason they're not here if they live elsewhere?
Yeah, I think in general. Now, mine are a little younger, one in college, one in high school, but the one who's older is not here, is in San Francisco. And I think in general, to Alex's point, we have to be more progressive in our thought, right? In making sure that we're including folks. And young generations certainly want that. They expect it and demand it. And if St. Louis isn't better if we're not better at it, we are going to lose the talent. Now, there are certainly good things going on in the region that are attracting, and that's fantastic to see and hear. We want to make sure we highlight those things and continue to give people choices.
Right. So deposits and investments for the future of the region.
Absolutely.
Much needed.
Kirk Mills is president and CEO of St. Louis Community Credit Union, and Alex Fennoy is Senior Vice President of Business Services at St. Louis Community Credit Union. Thank you so much for being here, and I hope that we get to talk a little bit more about this in the future.
Thank you so much.
Thank you. This was awesome. Thank you.
Today's episode was produced by Alex Hoyer, with audio engineering and podcast design by Aaron Dorr. Our production intern is Avery Rogers. Our executive producer is Alex.
St. Louis on the Air is a production of St. Louis Public Radio. Understanding starts here.
Our podcast proudly supports St. Louis artists by using music from Life Creative Group.
Do you find yourself regularly listening to episodes of St. Louis on the Air? Suggest us to a friend you think might enjoy our conversations. And leave us a review and rating on Apple Podcasts on the App Store. It's the simplest way to help people discover our show. Thanks.
St. Louis Public Radio is a member-supported service of the University of Missouri St. Louis.
Support comes from the Missouri Forest Products Association, committed to conservation and careful management of the state's forests to make them more resilient and better habitats for wildlife. ChooseWood.com.